Generally is the existing companies which will be going into new energy, existing companies which will be going into AI. So it will be a mix of that. I think CIO's role is to define the philosophy which is already existing. There are these certain pockets where passives definitely have an advantage. What we don't want is a bubble too soon and too fast, because after that, what happens, we've seen it in the past.
Hello and welcome to a very special series where we will be talking exclusively with some of the top minds at India's mutual fund industry space. And today we are joined by one such guest, Rahul Singh, who is the Chief Investment Officer at Tata Mutual Fund. Thank you so much, Rahul, for taking out the time to talk to us. You are one of those CIOs who has been at the core architecture of how Tata Mutual Fund has, changed its way since you've joined since 2018, right? Bringing in your investment style. So how does a CIO's role actually play here, right? How, when you actually join a fund house, coming with your own investment philosophies and changing the way it works, changing the way it engages with the asset allocation part of it as well, right? So if you could help us understand that.
Sure. First of all, thank you for this session. I think a CIO's role is to define the philosophy which is already existing. So we always had growth at reasonable price as a philosophy in Tata Mutual Fund since inception. What we've done is actually just defined it a little better and a little sharper. That's number one. Number two is to just refine the processes which are there in terms of the analysts, the role of the analysts, the role of the fund managers, making sure that the fund managers have enough freedom at the same time, have the guardrails and the philosophy which they have to follow, and also giving them the freedom to express themselves in terms of their own personal styles, and also to give people the growth as from an analyst to the FM role. I think that's how you build an organization which is long-lasting in terms of the culture. And the more people you have growing from within, the more the culture stays consistent. So it's a combination of these 2-3 things, I would say. Purely from an investment perspective, I think the philosophy was there. My job was to just make sure that, the processes are aligned to that.
Right. You mentioned growth as being, the core at the investment philosophy and principle, right? And we are at the decade where India's growth story is something that's been talked about, We know that obviously India is on its path to become world's third largest economy, and the stock market is also kind of following that path. But with this whole optimism scenario, where do you see the role of active fund management going from here? Because there's also this whole focus in passive fund management as well, right? So what is your take on that?
No, good question. I think passives have a role in the space like large caps or certain factors. For example, there are various factors like momentum, quality, value, and I think people want to experiment with that. I think momentum is a great factor, for example, which works, which we have seen working in a lot of market conditions. Similarly, in the large cap space, you have difficult to beat the indices in the large cap space. So there is definitely a role for passives. I think anything in between that, actives have and will tend to do better. So in terms of either the flexi cap approach or the small caps, we have seen that the small caps have generated more returns over a long period of time in active versus the passive, because that is where you can generate alpha. Anywhere in the mid and small cap space or the thematic space, so let's say you have sectoral funds like banking or infrastructure, we have seen that in some of those sectoral funds, the actives also tend to do better because you have more options and you have more options to create alpha, whereas the options are limited in the large cap space, and that is where you get restricted versus passive. So I think both will coexist, and there are these certain pockets where passives definitely have an advantage.
Right. But as a fund house itself, you mentioned how blue chips obviously have this obvious way of returns that we've been seeing, right? So where do you see the whole mid-cap and small-cap space going from here? And from the fund house perspective, do you see yourself being more into that category of offering as well? Because as you mentioned, small caps have been one of those alpha generators.
Correct. I mean, we have our small cap fund, which has done exceptionally well. Not so much just in terms of returns, which has been top quartile, but also in terms of the volatility and the beta at which we have been able to generate those returns. When it comes to mid cap, it's right now much more expensive than large cap, so I would be a little bit more careful on mid caps. But when you come to small cap, given the way our economy is growing and given the broad-based growth, it is the small cap space which is capturing most of those opportunities.
Right.
And like I said, I think the trick in small cap is not always to try and generate the maximum returns, but to generate good returns with very low volatility or very low beta. I think that I would prefer any day as compared to the highest generating, highest return generating small cap fund, because essentially you're taking much more risk to generate those returns, and someday or the other, it'll come back to hit you.
You mentioned like the sectoral part of it, right? Banking, finance, but in today's era of, trending themes that we talk about, AI, green energy, EVs, right? Do you see these sectors to kind of, be the trend for the next few years, or do you see some other themes, emerging that people should be focusing on in order to, chase that next phase of growth?
So I think most of the companies, the older companies also, are adopting this new green energy and AI, etc. So I don't think there will be separate companies for this. At least in the Indian context, I don't see separate companies or pure companies, barring a handful in the new energy space. Generally, is the existing companies which will be going into new energy, existing companies which will be going into AI. So it will be a mix of that. Even now, we see the existing auto companies are also getting into EVs.
Adapting.
Yeah. So it is to identify those companies which are adapting themselves faster. I think that is going to be much more important.
Right. Before I let you go, like one last question, because we've been talking so much about the optimism and the growth story. But do you have any one fear or one risk that you foresee, at least in the near future, that everyone should be at least aware or at least you are preparing for that?
See, apart from the geopolitical risks, which anyway there today in the market, I think the only other risk which I worry about is the fact that, because there is also there's so much liquidity in the market, and the FIs are also looking at emerging markets now, and hence India. We are in a situation where, we could become more overvalued very fast.
Right.
And that is something which we need to watch out for. Right now, I would say valuations are expensive, but not very high, not outrageously high to point towards a bubble. And I see valuation comfort in large cap especially. So there is some breathing space today. But what we don't want is a bubble too soon and too fast. Because after that, what happens, we've seen it in the past. So that's one risk which one has to be very conscious.
All right. Thank you so much, Rahul, for your time. Key takeaway is obviously to chase that growth, but also be aware of the bubbles that can be formed and the valuations. And we will see you soon in the next episode.